Now starting, all attendees are in listen-only mode.
Good afternoon, everyone. Welcome to the webinar, Extension on Statutory Due Dates due to COVID-19. On behalf of NASSCOM, first I would like to welcome you all and thank you for taking out time to attend this webinar. I am Sahil, part of Northern membership team, and we have Deepak and Tejasvi also from NASSCOM policy side as well. Our key presenter for today is Mr. Rajeev Khandelwal, Director Webtel Electrosoft. He is CA with over 25 years of experience in tax and compliances. And we have Shubham Khanna from their marketing team. In today's webinar, we'll cover various statutory liabilities with their original and extended due dates, and also cover the precautionary aspects associated with the same. We will take questions and answers at the end of this session. You may put in questions panel of the GoToWebinar console. I now request Mr. Khandelwal to take over from here. Thank you.
Thank you so much, Sahil, and the team at NASSCOM. A very good afternoon to you, the participants. So, as you are aware, the government, due to this COVID-19 situation, has extended various due dates, and a lot of since there are many due dates in between the dates specified by the government. That is from the lockdown period, that is 20th March, and till they have the period has been to 29th of June. So, if the due dates are falling in between these two dates, then the dates have been extended. So, since there are many responsibilities, government has not chalked out or told us about each of them, but here an effort has been made to outline all these so that we don't miss out any important ones. So let us begin. So first of all, there is some relief for insurance premium as because of this situation, people may not be able to pay their premiums in time. So for health and motor insurance, which is again very important, if the renewal date was between 25th March and 14th April, the government had specified that the premium could be paid till 21st of April. So if your renewal date was in between these two dates, and if you pay the premium till 21st of April, the policy shall not lapse, and other things which like inspection of the vehicle is to be done if the policy lapses, etc. All those things will not happen, and there will be no penalty for this period also. Then coming to the other statutory things like ESI, PF, etc. So for ESI for the month of February, which was to be paid by 15th of March, the due date was extended to 15th of April. Similarly, for the month of March, the due date was 15th of April. That was extended to 15th of May. But for subsequent periods, there is no extension. So for the month of April, the same is to be paid by 15th of May, and for May, it is to be paid by 15th of June. No extension as of now. That means that on 15th of April, we'll have to pay ESI of March and April both. Then similarly, for PF, some extension has been done. Initially, this was not given, but on 15th of April itself, which was the due date, they extended it to 15th of May. This is for the PF payment for the month of March. That is, no interest and penalty will be leviable if it is paid by this extended due date of 15th of May. But for the payment PF, which will be payable for the month of April, it has to be paid by 15th of May. There is no extension as of now. These were as per the press release of Ministry of Labour and Employment dated 15th of April. And again, even in the case of PF, on 15th of May, you'll have to pay the PF of both March and April if you have not already paid for March. In fact, on 15th of April, you'll be paying ESI and PF for March and April, both the months, because for 1 month there is extension as of now, and for the other month, there is no extension. In the case of PF, the government has provided more relief. What is that? It says that for the next 3 months, the government will pay the PF contribution. I think that's a very big step that the government has taken, that it will be bearing the PF contribution. Now, what are the details of the scheme, to who all it's applicable? Let us see. And in fact, the government has said that not only the employees share, even the employer share of 12%, that is total 24% of the contribution, the entire contribution, government will be bearing for these 3 months. So the logical question is to which organizations it is applicable. Is it applicable to all the organizations where PF is applicable? Let us see. The government says that it's this kind of relief is applicable only where the number of employees is up to 100. If the number of employees 101 or more, in that case, this relief is not applicable. And even if, for an organization having up to 100 employees, another condition is that salary of at least 90% of the employees should be less than 15,000. So if the salaries of more than this limit is 15,000 or more, then also this will not be applicable. So if you want to take benefit of the scheme, twin conditions should be satisfied. That is, the number of employees should be up to 100 and salary of at least 90% of them should be less than 15,000, not even 15,000. It should be less than 15,000. Then you will get this relief, whereby for 3 months the government will be bearing the share of PF of both the employer and the employee. Another relief that they've given is that you can take advance from your PF contribution, the account where your contribution is added each month. You can take advance from there, and it will be a non-refundable advance. And here also some limits has been specified. First limit is the 3 months basic salary and DA. The maximum amount that can be given is this much, and the other limit is 75% of the balance in the PF account. So both these limits have to be seen, and the lower of the limits will be available to you for withdrawing from your PF balance account. This is a non-refundable advance, but as we understand, this is your own money, apna dhan. This is your own money, so please use it only when required, because this is not something that the government is giving to you. This is your own money which you are saving for your future. So please don't use it unless and until it's very necessary. Then, if we take the example, let's say the balance in the EPF account is rupees 50,000 and the monthly basic salary and DA is 15,000. So 75% of the PF balance is 37,500 and 3 times the basic NDA is 45,000. So the lower of the two, 37,500, that amount you can withdraw from your PF account. Then the government has provided various reliefs under various acts as per the ordinance dated 31st of March 2020, press release of 24th March 2020, various notifications issued on 3rd April and on other dates, etc. And still they are issuing various circulars, legislative amendments, etc. to give relief whatever is being discussed. One of the things that has been launched is the PM Cares Fund. This is the Prime Minister's Citizen Assistance and Relief in Emergency Situations Fund. And donation to this fund is 100% deductible under Section 80G when you file your ITR. And here, for some of the donations, there's a limit of 10% of gross total income. But in this case, it is not applicable. And another good thing is that if you make the donation up to 30th of June 2020, you can use this while filing your ITR for financial year 1920. You need not wait for the next financial year for which you will file the return. And it has also clarified in MCA circular what CSR expenditure for the bigger companies having specified turnover, etc. Some CSR expenditure on social relevant schemes, etc. the big companies have to do. So what all is included, they have specified. So first we'll talk about in what all cases it will constitute CSR expenditure, which is mandatory for bigger companies. So PM Cares Fund is included here. State Disaster Management Authority, if some amount is paid to it, it is included. Use of CSR funds for COVID-19 related activities like sanitation, preventive healthcare, etc. This is included. Payment of ex gratia about the if you're paying normal salary to your employees, that is not covered under the CSR expenditure even during this period. But if you pay some ex gratia amount above the normal salary to temporary, casual, or daily workers only, then it is included. Even in that case, the board declaration will have to be given, a declaration by the board of directors, duly certified by the statutory auditor, then it can be included in the CSR expenditure. Other things which are not included, which are excluded, let us see now. If some donation is made to CM Relief Fund by the company, this is from the point of view of the company. So if any donation is made by the company to the CM Relief Fund, it is not considered a CSR expenditure. Similarly, State Relief Fund for COVID-19, payment of salaries and wages to regular or contractual persons in the lockdown period, etc. In all these cases, in these three cases, the amount paid by the company is not included in the CSR expenditure. So that was about the CSR expenditure. Next, we come to the income tax dates where there is no extension. Since this was prior to the lockdown period, there is no extension for these dates. Let us see which are these dates. The payment of TDS or TCS, which was deducted or collected in February, there is no extension. The due date stands at 7th of March. Similarly, the date of payment of advance income tax by all the assessees 100%, including 44 AD and 44 ADA cases, the due date remains 15th of March. No extension for that. Then coming to specific extensions in income tax, let us see. Filing the income tax returns for the financial year 18-19, that is 19-20. The due date was already July, etc. But you still, if you not filed your returns of a companies, etc., it was September. And the last date was 31st of March. But since it was during the lockdown period, that is why the due date has been extended to 30th of June 2020. Let us remember that for the financial year 1920 or the assessment year 2021, also the due date is now just 1 month later, 31st of July. So as of now, there is no extension for the current financial year 1920 for which we have to file the returns, the assessment year 2021. The date is as of now 31st of July. So we expect that the extension will come. As of now, it is not there. So if there are any pending returns, late returns to be filed for financial year 18-19, they can be filed by 30th of June. Then Aadhaar PAN linking, which is also mandatory for filing ITRs, the date has been extended to 30th of June. Similarly, the scheme of Vivad Se Vishwas scheme, where you can deposit your disputed amounts in income tax without additional 10% payment, that date has been extended to 30th of June. Then there's a general extension by the department for the due date for issue of notice, intimation, notification, approval order, sanction order, time limit for completion of proceedings by any authority, commission or tribunal that is on a part of the government or the department. Then from the point of view of the assessee also, the due dates for filing of appeal, furnishing of return, furnishing of statements, furnishing of applications, furnishing of reports, furnishing of any other document, and any other compliances, including investments in tax saving instruments for the financial year 1920, investments for rollover benefit of capital gains. I'll just explain that also. And this is applicable to these laws, which are these: Income Tax Act, Wealth Tax Act, Prohibition of Benami Property Transaction Act, Black Money Act, Securities Transaction Tax Law, Commodity Transaction Tax Law, Equalization Levy Law, Vivad Se Vishwas scheme. And these reliefs are for the cases where the due date is falling between these two specified dates. And which are these two dates? 20th of March 2020 and 29th of June 2020. If the due dates are falling in between the due dates, these two dates, in that case, the due date in general has been extended to 30th of June 2020. There are, in specific cases, there are specific dates which have been specified, about which we'll be talking just now. And probably the government also expects that some more extension will be there if this problem COVID-19 continues for longer. So in that case, it has also taken the power for such other extended date as may be required. So that power is also with the government now. Coming to the specified dates, other cases, specific cases, I've already told about payment of LIC premium, deposit of PPF, etc. for saving tax for the financial year 1920. The due date has been extended to 30th of June. Similarly, if you Similarly, if you wish to invest in some property, you want to buy a house, or you want to complete the construction of a house property, you wish to invest in capital gain bonds, etc., for exemption of capital gains, and the due date is expiring by 30th of March 2020. In that case, the due date has been extended to 30th of June 2020. Then the government says this filing of returns, filing of statements, filing of other uh, documents, etc. That is all fine. That you can delay. But the government says that I also need taxes to run the government because so much of expenditure is to be done. So it says, please pay your taxes in time. So whether it is advance tax, self-assessment tax, regular tax, TDS, TCS, equalization levy, securities transaction tax, commodity transaction tax, please pay the taxes in time. So it says if the due date is falling between 20th of March to 30th of June 2020, if you pay at a later date than the original due date, then a concessional rate of interest will be charged. So it is advisable that you pay all these advanced taxes, self-assessment tax, regular tax, GST, etc., all in time. Otherwise, you have to pay interest on that. So if it is between the delayed payments are between these two dates, then it is a concessional rate of interest that is 0.75% per month. And if you make the payment after 1st of July, then the rate of interest will be 1 or 1.5% as the case may be. And the late fee, penalty, prosecution, etc., even those things will happen if it is made after the specified date. So for compliances, the due dates from 20th of March to 29th of June. If you pay by 30th of June, the rate of interest will be concessional 0.75% per month. If you pay after this date, then the rate of interest will be 1 to 1.5% as the case may be. For different delays, it is specified as differently. In some cases, it is 1%. In other cases, it is 1.5%. But for other dates, so it is if the compliances which are falling between these two dates, these are the rates of interest. For compliances which are falling on other dates, if it is after 1st of July or it is before 20th of March, then in this case, if you are now making the payments, the rate of interest will remain the one which is applicable normally. No relief in those cases. Then, as I said, the advance tax can be paid for the fourth installment of advance tax can be paid by 30th of June. Similarly, the first installment of advance tax for assessment year 21-22 or financial year 2021 can also be paid by 30th of June. The original due date is 15th of June. These red dates which you see here are the ones where interest will be applicable if you pay after the specified due date. So you give the relief, you can pay later, but if you pay later, you'll have to pay interest also. Then for payment of TDS, TCS collected in March, the TDS deducted in March, the payment of TDS, TCS deducted collected in April and May. The due dates for all these have been extended to 30th of June. But again, if you pay late after the specified original due date, then interest is payable. Then similarly, TCS statements for Q4 of 1920, you have to file by 30th of June. Original date was 15th of May. Similarly, for even for the next quarter of the year 2021, the TCS statements will come due on 15th of July. As of now, there is no extension for that. Similarly, for TDS statements Q4 of 1920, the specified due date is 30th of June. These statements you can file later if you have deposited the tax earlier. So no problem with that. The tax should have been deposited earlier. TDS. Similarly, even for the next quarter, the TDS statements for first quarter of 2021 will fall due on 31st of July. No extension for that. So for 24, 26Q and 27Q, they have to be filed by 31st of July. And for the earlier quarter, this is to be done by 30th of June. Then some other returns have to be filed 26QAA by banks, etc. They have also been, the date has not been extended. They have to be filed with the specified due dates 30th of June and 31st of July for the next quarter. Then for issue of TDS certificates, once you've deposited the taxes, you have also filed the returns. And the next statutory duty is to issue TDS certificates, Form 16, 16A, TCS certificates 27D, etc. All the due dates have been extended to 30th of June. So you can issue the certificates by this date, no problem, no late fees, no penalty, etc. Then in the case of purchase of property more than 50 lakhs, also TDS is applicable. So to those who it is applicable, also for the month of February, March and April, tax can be deposited by 30th of June and the TDS certificates can be issued by also by this date of 30th of June. Then a 2 years ago, a new obligation was cast on individual HUF, which is not liable for being for tax audit. In that case also, if he is paying rent even for personal purposes, if it is more than 50,000 per month, then he needs to deduct TDS at the rate of 5%. So for the full year in one go, and that the due date is 30th of April, that is to be deposited for the full year 1920 in this case. due date has been extended to 30th of June. With interest, you can deposit tax by this date, and the issue of TDS certificate in this case has to be done by also 30th of June. Then uploading of 15GH for the quarter ending March, again 30th of June you can do that, and for quarter of, 1 of 2021 that can be done by 15th of July. So wherever these extensions are there, we should be very careful. We should try and do our work in time, because the next quarter work will also fall due in another month or so. So let us try and do wherever possible. If we are working from home and the data etc. is available, it is always advisable to do your work in time, because subsequent obligations will also start falling due, and you won't have sufficient time for them. So that is why I'm saying, please try to do your compliances in time, even though the government has extended various due dates. And also, you have to furnish a statement of financial transactions. Generally, banks, credit card companies have to furnish a statement under Section 285 BA, subsection 1 for the financial year 1920. This is also to be filed by tax audit assessees who are receiving cash of more than 2 lakhs against sales. So, in general, also it is applicable. So, the due date was 31st of May. It has been extended to 30th of June. This Form 61A is to be filed on the department's website online. Then certificate for lower or no deduction. The department's order has come on 31st of March explaining the various cases. Case 1 is where the certificate for lower deduction for financial year 1920 was there, and you have already applied for 2021. The certificate has not been issued. In that case, the government says the certificate will be issued by 30th of June, and the certificate of 1920 will be valid till 30th of June. So you can ask your parties to continue deducting at a lower rate. So if already you've applied for this certificate for the new year, but even though it has not been received. Another case can be when the certificate for lower deductions for 1920 was there, but you have not applied for it as of now. You can apply by 30th of June, and the certificate will be issued by the department in due course, and the certificate of 1920 will be valid till 30th of June. Even if the payments are being received during the current financial year till 30th of June, the deductor can still use the old rates, the lower rates which have been specified in the certificate for 1920. Another case is where there was no lower deduction certificate for 1920. The person or the company or the deductor or the businessman should apply for this as soon as possible, and the government is expected to issue by 30th of June, and then he can start using it. And in the case of non-residents, including foreign companies having P in India, the first two cases are similar. In case 3, where the certificate for lower deduction for 1920 is not there, you can apply as soon as possible. And certificate for 2021 is expected to be issued by 30th of June. And in this case, you can ask the parties to deduct TDS at the rate of 10% plus surcharge plus cess. This is as per CBDT order of 31st of March. That was all about income tax due dates, etc. After this, let us proceed to GST. Whatever questions are there, you can ask in the question section, and after the session, I'll try and answer most of those. So after that, we are coming to GST. In the GST, the dates have not been extended for the month of March. So for GSTR 1, 6, 7, and 8, the due dates remain same. They have not been extended. Then there's a Sabka Vishwas scheme. This is the amnesty scheme for service tax assessees or excise assessees. The payment date has been extended to 30th of June. So that means that there will be no interest for this period if it is paid by 30th of June. So benefit can be taken from there also. Then another problem people faced was in this lockdown period that e-way bill validity had expired because the tax was stopped and etc. So in this case, the government has specified that where the validity is expiring between 20th of March 2020 and 15th April 2020, in that case, the validity has been extended to 30th of April 2020. So no issues for that. That is notification number 35 dated 3rd of April. Then there is a relief from the 10% ITC rule. Those in the accounting or the financial field will know that the rule 36.4 is sub-rule 4 is there, as per which you have to claim only the amount of ITC which is available in GSTR 2A plus 10%. It is not no, whatever is appearing in your books of account you can claim that. Only the amount which is appearing in GSTR 2A plus 10% can be claimed. But during this difficult period, the government says that from the month of February 2020 to August 2020, you can claim whatever is appearing in your books of account, that is eligible ITC which is appearing in your books of account, that can be claimed in GSTR 3B. You need not see what is appearing in 2A. So for all these months, this relief has been given. But when you go for filing the 3B of September 2020, then on a cumulative basis, you have to do a matching of 2A of from February to September 2020. Total 2A amount you have to see, add 10% to that, and reduce whatever you have claimed, and the balance amount can be claimed in the GSTR 3B of September 2020. So for provisional relief has been given, or this sub rule has been suspended for a few months, but later on a cumulative basis, this matching has to be done. In like income tax, there is a general extension for CBIC also, and for the assessees also, for filing statements, for filing appeals, for filing applications, etc. And if again the due date is falling between these dates, 20th of March and 29th of June 2020, and the date in general has been extended to 30th of June 2020. This is as per notification number 35 of 3rd of April. In some cases, there is no relief or some specific relief has been given. That is time and value of supply. So when you have to issue a bill, it has to be issued as per the time and value of supply. Then if your turnover is increasing beyond the limit of the composition scheme, you have to convert to the normal scheme. Even for registration, the time limits, etc., remain the same. No relief in that case. Provisions relating to casual and non-resident taxable persons, provisions relating to tax invoices, provisions relating to returns, because specific relief has been given in that case. Then furnishing of returns by other person, because relief is available for tax deductors, ISD, and non-resident tax persons specifically. Then inspection of goods and movement regarding e-way bill, levy of late fees, registration, etc. And interest on delayed payment of tax, liability of partners of firms to pay tax, penalty for certain offences, detention, seizure, and release of goods and conveyances in transit. There is no relief, or in some cases, there is specific relief is there. This is notification number 35 of 3rd of April 2020. In a force majeure clause has also been added, that if there is any war, any epidemic is there, earthquake is there, war is there, or any other calamity caused by nature or otherwise affecting the implementation of any provisions of this act, then the government has taken a power for itself in section 168A. That is, the government has got the power to extend the time limits in respect of actions which cannot be completed or complied with due to force majeure, even with retrospective effect. So that was about the general about the indirect taxes. Now coming to specifics of GSTR of GST, late fee waiver of GSTR1. Now let us understand these late fee waivers or concessional interest or no interest. These are all conditional. This is as per notification number 32 of 3rd of April. So, waiver of late fee for delay in furnishing GST returns for the month of March, April, and May 2020, and for the quarter ended March 2020, the relief or the late fee waiver is only if GSTR1 is filed by 30th of June. If you do not file it by 30th of June, then the normal provisions will follow. The normal late fee will have to be paid. This is as per circular number 136. So if the due date for filing GSTR1, if the turnover is up to 1.50 crores, and for this you have to see the previous year turnover. So if the turnover is up to 1.50 crores in 18-19, and you have to file the return GSTR1 for the quarter of January, February, March 2020, or for the month of March, April, and May 2020, in that case, the due date is 30th of June in both the cases, and late fee is nil if you file by 30th of June. And if you file after 30th of June, late will be payable not from the extended due date but from the original due date. Please remember this. This is as per notification number 33 of 3rd of April. And coming to the due dates of 3B for the months of February, March, and April 2020, again, please remember these due dates have not been extended. The circular number 136 clearly talks about this, that the due dates have not been extended, only some relief has been given for this specific period. So again, for the lower interest which has been specified in certain cases, this is conditional. This is notification number 31 of 3rd of April. This lower rate of interest, that is 9% per annum or nil rate, shall be subject to the condition that due date is paid by the filing return in GSTR 3B by the date as specified in the notification. If it is done at a later date, then these reliefs will not hold good. So for the 3B, what is the waiver? Waiver of late fee for delay in furnishing GSTR 3B from February to April 2020, provided GSTR 3B is filed by the dates specified in the notification. So what are these dates? And what are the consequences of filing late 3B? Interest at the rate of 18% from the due date, original due date of 3B, that is 20th, 22nd, or 24th of the next month, till actual date of filing. It is not from the extended due date, it is from the original due date. Late fee will be applicable, penalty will be applicable. That is why I would request, please, during these extended due dates, do all your compliances. So what is the relief of interest and late fee? Let us see. This is again, I would reiterate that it is only if these returns are filed by the extended due date. Otherwise, full late fee and interest shall be payable. For 3B, let us see what are the due dates. Up to 1.50 crores if the turnover is up to 1.5 crores in the earlier year, that is 18-19. And for February and March, the due date is 30th of June and 3rd of July. These are the extended due dates. And for the month of April 2020, for which the filing will have to be done, turnover of 1920 is to be seen. So if the turnover is up to 1.50 crores in 1920, then the GSTR 3B of April 2020 can be filed by 6th of July. Interest, if not filed by the specified dates, if you file by the specified due dates, there is no interest. If you file after these specified due dates, the rate of interest will be 18% for the full period. Similarly, late fee will not be applicable if you file by these due dates. If it is done later, then from the original due dates, late fee will be leviable. For turnover from 1.50 crores to 5 crores for February, March, and April, the due dates are 29th of June for February and March. For April, it is 30th of June. No interest will be payable if it is done by these specified dates. Thereafter, it is done, then 18% for the full period and late fee from the original due date. Coming to cases where the due dates is above 5 crores. So below 5 crores, no issues. You can file up to the extended due dates. No late fee will be there. No interest will be payable. Interest will be payable if the turnover is below 5 crores. Interest will be payable only if you do the filing after the specified due date, extended due date. But in the case of 5 crores and above, for GSTR 3B of February, March, and April, the due date has been specified now as 24th of June 2020. Here, different slabs have been given. So if there's a delay up to 15 days, no interest is payable. So even for the bigger assessees, we get 15 days extra time to file 3B. And in the case of 3B, let me specify that not just depositing the tax is not sufficient. Unless and until you offset the liability. And how do you offset the liability? Offset the liability only when you file 3B. So even if you deposit the entire tax, even if you deposited more tax, doesn't make a difference. You have to file 3B if you want to take the benefit of this. If you deposit the tax but do not file 3B, then the benefit of interest will be not be there, because first you have to offset that liability, then only the government can use that money. So coming back, so delay up to 15 days, no interest will be applicable. From 16th day after the due date till the specified extended date, the rate of interest will be 9% per annum. So normal rate at the rate of 18% per annum for the entire period if filed after 20th of June. And late fee, if you do the filing till the specified date, no late fees will also be there. This is as per the notification number 31 and 32 of 3rd of April. So giving you a case study, if you are doing the due date is 20th of March for the month of February 2020. If you do by the specified due date of 24th of June, there will be The date is 24th of June, specified due date. But if you do the filing by 4th of April 2020, no interest is payable. If you do the filing by 5th of April, from 5th of April onwards, the 9% rate of interest is payable from this date. And if you do the filing after 25th of June, the normal rate of interest 18% is payable. Similarly for the month of March and April also. For the month of May 2020, above 5 crores, the date has been extended to 20th of June. And in the case this was above 5 crores, and for the month of May, you want to do the filing, and the due date is it is up to 5 crores for turnover in 1920. Then the specified due date is 12th of July for these specified states and union territories, 15 numbers. And if it is for the other states, then it is 14th of July, including Delhi, Haryana, eastern states, northeastern states, West Bengal, etc. So that was about GSTR 1, 3B, etc. Most of the queries are regarding that. And even for 9 and 9C, the dates have been extended to 31st March 2020 for the financial year 18-19. 17-18 GSTR 9C, the date has already expired. For 18-19 financial year, the filing can be done till 31st of the due date was 31st of March. This has been extended to last week of June 2020. The dates are being staggered. And as you might be aware, that GSTR 9 filing is mandatory above 2 crores. And GSTR 9C, which is the audit report, the filing is mandatory if it is 5 crores. This is for financial year 18-19. Then it's for smaller people, composition dealers, the various reliefs have been given. If they want to opt for composition scheme for the new year 2021, in that case, the due date has been extended from 31st of March to 30th of June. They have to do this filing in form CMP02. Then payment for the March quarter of 1920, you have to do the payment in CMP08. The due date has been extended to 7th of July. But also remember that payment for the June quarter of 2021 will also fall due on 18th of July. In filing GSTR4 for the full year, the due date has been for 1920. The due date has been extended to 15th of July. And reversal of ITC in special cases, that is the ITC 03, the due date has been extended to 31st of July. Then some other dates have been specified by in the case of GST also. What are the due dates that which have been extended? Let us see. Monthly return for March, April, and May. GSTR 5 and 5A for non-resident taxable persons. GSTR 6 for input service distributor. GSTR 7 for tax deductors, and GSTR 8 for e-commerce operators for the month of March, April, and May can be filed till 30th of June. So relief for all these people. Then ITC 04, which is the return for March quarter for goods sent to or received from a job worker. The date has been extended for the March quarter till 30th of June. Then an online application for letter of undertaking for exports and supplies to SEZ without payment of tax in 2021. The due date for filing this applicable form RFD 11. The due date has been extended to 30th of June. Then these were about the GST reliefs. And do we have some questions? We can take those questions, or should I proceed with the MCA reliefs? Shubham, do we have some questions?
Already. Yeah.
So I think we'll take the
sir,
questions first. Thereafter, I'll
yeah.
go to this. Yeah.
Should I ask the questions now, sir?
Yeah.
I think we can take questions in the later part, but
Okay.
let's go with the webinar.
Let me first close this then. Okay. So talking about the other reliefs which are there, let us see. The Ministry of Corporate Affairs has also given various reliefs for companies. What are these? Let us see. Again, a very big relief has been given by MCA, that is filing of any document, return, statement, etc., which is required to be filed with MCA. The company MCA has launched a new scheme called Companies Fresh Start Scheme 2020, or CFSS 2020 in short. Irrespective of the due date, if you the due date may be 1 year ago, or 2 years ago, or 5 years ago, if you do the filing between 1st April to 30th September 2020, then no late fees will be payable. Only the normal fees will have to be paid. In this case, what are the reliefs? Filing of any pending form, annual return, even annual returns can be done between 1st April to 30th September 2020, or only normal fees is payable, no additional fees is payable, no penalty or prosecution is there. Even inactive companies can become dormant companies with simple declaration, which is a minimum compliance. Thereafter, they can go for other compliances also. Then then finally they have to file form CFSS 2020 for seeking immunity in 6 months from end of the scheme. Similarly, we have also a scheme for LLPs, limited liability partnerships, which is the LLP settlement scheme, which has now been modified, wherein any documents due till 31st of August 2020 can be filed from 1st April 30th of September 2020 without any late fees. Then other reliefs are regarding holding of board meetings, etc. As you might be aware that a board meeting has to be held within 120 days from the end of the quarter. This period has been extended by 60 days for the next 2 quarters, that is till 30th of September. Then holding of one meeting is mandatory for independent directors during the financial year. For financial year 1920, this holding of such a meeting will not be treated as a violation. Similarly, minimum residency in India for a period of at least 182 days is mandatory for at least one director of every company. Even this compliance will not be considered a violation if it is not there. Then companies who are taking deposits from the public or have taken debentures also need to maintain some amount of deposits or amounts for debentures. So the requirement to create a deposit reserve of 20% of deposits maturing during the financial year. For financial year 1920, the due date has been extended from 30th of April to 30th of June. Similarly, the requirement to invest 15% of debentures maturing during this 1920 due date has been extended till 30th of June. Then a new company's order has been there for the year 2020. The audit report was to be made in this format as per the company law, but its applicability has been postponed. And now for the financial year 1920, the old CARO can be used. The CARO 2020 will be applicable from financial year 2020 onwards. And also for a new company, it has to do a filing of uh, a declaration of commencement of business within 6 months of incorporation. Again, relief has been given there. An additional time of more than 6 months has been allowed to them also. Then another big relief in this COVID period is that the threshold of default under Section 4 of IBC 2016 has been raised from 1 lakh to rupees 1 crore. Because if people are facing liquidity crisis, then the creditors can go for bankruptcy proceedings against the person. So this amount has been raised from 1 lakh to rupees 1 crore. And if the situation continues beyond 30th of April, which it seems it's continuing, they will also suspend other sections so as to stop companies at large from being forced into insolvency proceedings. Then there are various reliefs in customs, etc. I think different circulars, etc. have been issued. So finally, I'll take the ones for financial services that what the reliefs have been given. For this period, you can withdraw cash from other banks, ATMs, etc. without any fees to be paid. As you are aware, beyond this particular limit, I think 3 during a month, if you withdraw cash from other banks' ATMs, then some charges are leviable. Similarly, if your bank balance falls below a particular limit, then banks charge the minimum balance fees that has been waived during this period. Then also reduced bank charges for digital trade transactions for all trade finance consumers. Also, a big relief to the public at large. The 3-month moratorium has been given on payment of EMIs, credit card bills, etc. So, a valid question there would be whether these reliefs should be used or not. If you have funds, please make the payment in time, because relief has been given in payment of these dues, in payment of EMIs, payment of credit card bills, etc. But there is no relief in payment of interest. So for all this period, you have to pay. Even for these EMIs that you are paying late, you'll have to pay additional interest. Similarly, for credit card bills, and remember, in the credit card bills, the rate of interest is very high. It is as high as 24 or 36% per annum. We generally are not aware because the amounts may be smaller. So please try and pay these in time. Otherwise, you'll have to pay this interest because there is no waiver for interest. And other reliefs are there. But I would request finally to each one of you that please try and complete these compliances in time, pay these taxes in time, pay these returns within the specified period or even earlier to that, because otherwise all these duties, responsibilities, compliances will keep on piling up, and even the next quarter obligations will also start. It will be very difficult for us. So that is why please try and do these things as much as possible. And I think most of you are from the IT companies, and that is why you must all be working from home. So even these compliances can be completed from home. And if you do not follow this exam, then probably around 30th of June, this will be a position of the compliances, etc. So that was all I wanted to share with you. Now I would like to take up those questions if there are there.
So thank you so much, sir. I would like to start with the questions. In the meanwhile, I will request all the participants post their queries, question and answer section if they have any. So, sir, the first question is related to the health insurance. So the questions goes like, we provide health insurance to our employees and their families. We are looking for quarterly payment of premium. Is that possible?
They are taking health insurance for the employees and the families, and quarterly payments are they are doing. So what?
So they want to do quarterly payments, premium.
No, that you have to that you have to check with the insurance companies whether that is allowing that or not. You cannot do it yourself. The government has only for a particular period had given that relief, but other than that, you have to check with your insurance company.
So Manishji, you have to check this out with a particular insurance company, health insurance provider. So, sir, second question is about all the status. So we have covered. Okay. So someone is asking to elaborate about the EPFO fund, which they can withdraw in lockdown period. As you said, PF fund is 50,000 rupees. It is 24% or 12% of the employee, or 3.767% of the employer.
See, the government has allowed you to withdraw part of your PF balance. But as I said, this is your own money, and please use it. And you are keeping it, you are saving it for your future. Please use it only when it is absolutely essential, because this is not something being given by the government. This is something your own money is being there, and you're using it. And there too, some limit has been specified. But the lower of the limit you can withdraw 3 months of your contribution or 75% of the balance. Whichever is lower can be withdrawn by you. Please use it as the last resort only, because this is your own money. Yeah, Shubham.
Yeah. The next question is GSTR 1 need to be paid on due date?
GSTR 1 due date also has been extended. So the due dates which have been specified generally around 30th of June. So if you do the filing by 30th of June, because there no payment of taxes involved, no issues with that. You can do the filing by that date. But if you do the filing after this date of 29th of June or 30th of June, whatever has been specified in specific cases and for specific months, then the whole late fees will be applicable from beginning, from the original due date. So it is essential that we do the filing within the specified due dates which have been specified by the government in this COVID-19 period. But if you go beyond that, then the filing late fees and the interest will be applicable as in the normal circumstances. No relief will be there.
Sure, sir. Sir, another question. For LDC, what will be the certificate limit?
Which certificate?
LDC.
Huh?
Sir, for LDC, what will be the certificate limit?
For ATC?
Yeah.
ATC normal PPF receipt will be there, or insurance premium receipt that you paid will be there, housing loan interest will be there. All these things are there as proof which you submit to the employer. And as again, probably that could be a topic for a future webinar regarding the TDS which is to be deducted, how because the government has extended the due dates for till 30th of June. Employees can make the investments for financial year 1920 also, where the due date was expiring on 31st of March. The due date has been extended to 30th of June, but the payment of salary for the month of March has already been done. So what is to be done in that case? And also in the new financial year 2021, there are two schemes of taxation. Which scheme is beneficial? Which scheme is to be allowed by the employer, etc. So that probably I think a long deliberation is required on that. We can probably do it webinar in the next session when it's there. Yeah.
Right. Sir, can you tell us a bit in detail about the TDS on salaries?
Okay, if we have time and don't have any further questions, I can explain. See, we have still some time till 30th of April, because most of you must have got your salaries for the month of March by now. And the employer, the original due date for paying TDS on salaries and even other TDS for the month of March is 30th of April. But the salary has already been paid. Whatever declarations you had made or proofs you had submitted, on the basis of that, employer has deducted TDS and paid salaries to you. Now let us say the total amount of TDS that the employer or the company has to deposit in this case is, let's say, 1 lakh rupees, and because of some further investment that you've done till now after 31st of March, the TDS to be deducted by the employer for the whole company is 90,000. So what the employer can do, he can deposit this 90,000. Now what is to be done for this 10,000, because you have made further investment in, let's say, PPF. So in that case, this 10,000 can be refunded back to the employee. So at least for 30th of April, we have some time where even if the salary has been paid, but since TDS has not been deposited, the employer can deduct lesser TDS and the balance amount can be refunded back to the staff. And another question can arise here, that if the further investments are made in the month of May and June, what is to be done? Because the employer in most of the cases, and let me tell you, if you deposit this TDS on salaries the 30th of April, in that case, no interest is payable. But if you make the payments, the government allows you to do this TDS deposit in May also, in June also by 30th of June. But you'll have to pay interest at the rate of 0.75% per month. So if you don't want to pay this interest, it's okay. You can deposit by 30th of April. If you are okay with paying this interest, then you can go till 30th of June itself. Then another thing, if you make these investments, if you deposit more PPF, etc., in May and June, and even if you've deposited in April, then what is to be done? Now, in this April, May, June period, whatever you are depositing, you can use it even for the financial year 1920, and also for either for 1920 or for 2021. So what can be done? So in some of the cases, or I'd like to say in most of the cases, the person will, as of now, not be clear, because 31st of July is still a little far off, and the employee may not know whether he has to deposit it, extra tax or no, extra investments are required or not for financial year 1920 or for that purpose. So he still has to consult his CA, etc. In that case, if you want to do some investment, you can do now. And in fact, you can do it in two parts, because let me tell you, if you deposit, let's say, 1 lakh rupees in PPF now in April, May, June, you can use it either for 1920 or for 2021. You cannot use it, you cannot break it in 1920 and 21. So you cannot use 30,000 for 1920 and 70,000 for 2021. If you wish to use it for the two different years, it has to be deposited separately. So that is one mantra. And secondly, if you deposit it in two parts, let's say 60,000, 40,000, you can use either 60,000 in 1920 and 40,000 in 2021, or the other way around. That can be done. And let's say another problem that you will face is that in the new year 2021, what will happen is that there are two schemes of taxation. One scheme is the old one, the normal rates of interest, and the other one is the new scheme, whereby we have lower rates of interest in income tax, but no exemptions and deductions are there. So if you make this investment now and you want to claim it in the new year, you will not be able to claim in the new year if you go for the new scheme. But if you go for the old scheme, it is fine. So as of now, it may not be clear. So once you are approaching 31st of July, you are filing of return of income, and it is clear to you that you don't, even if you don't need it for 1920 this amount of investment, but in the new year you will be going for the new scheme, please take these investments in financial year ITR of 1920, because there you can get a refund for that. And even if there are other incomes, normally we have other incomes, we make investments etc. in bank fixed deposits, we also have some capital gains etc., and some rental income may be there. So we pay concessional rate of interest, or no tax has been deducted in those cases. Even the excess tax that has been deducted by the employer can be adjusted against those, and the balance amount, still if some refund is there, you file the ITR, the government will give you refund in due course. And again, I will like to reiterate that if you want to use the new scheme in the new year 2021, then whatever investments you make in this period, please claim it in this year 1920 ITR, because in the new year you will not be able to get the benefit. But obviously, if you want to go for the new scheme, then you can use even these investments in the new year. Now the question will arise, in the new year 2021, which scheme will be beneficial? The old scheme of higher rates of tax, or the new scheme of low rates of tax but no exemptions and deductions? See, for the new scheme, the flip part is that you have to pay the taxes, low rate of taxes. You won't get the benefit for the normal things, like PF is being deducted. The company, if you are below that limit, specified limit of PF, in that case the company will be deducting PF. So the benefit of that will go. In standard deduction 50,000 each employee is getting, even that benefit will go. Then a few more things, the benefit, you like profession tax, if in your state profession tax is applicable, you won't get the benefit of that. So even for even without making further investments, we are getting the benefit of these things in the old scheme, but not in the new scheme. So in general, if the salary level is low and you're not making much of investments, for the new employees who have lower salary levels, I think the new scheme is beneficial, because there the lower rates are there and you don't have to make further investments there. But as the income of income level grows, and in that case you make more investments, you get more benefit. And after 15 lakhs, the rate of tax is the same, that is 30% in both the cases. So as the income level goes higher and higher, the difference keeps on reducing. So if you want to make investments, if you want to save for your future, old scheme is in general beneficial. If you don't want to make investments, you want to avail of the lower rates of tax, the new scheme is beneficial. At this, I'm talking about the next financial year 2021, and not the old financial year 1920, for which we will be filing the returns. That was all I wanted to share with you. Is there any more question, Shubham? Is there any more question? Otherwise, I think we can wind up the session. I think I've shared what all I wanted to share with the audience.
Yeah, sir. Just one more question. Someone wants to confirm the due date of TDS payment for Q4. Is that 30th of June, sir?
Yeah, Q4 TDS actually is not paid generally quarterly. In very specified cases only, it is to be paid quarterly. TDS has to be deposited on a monthly basis. The normal date is the 7th day of the next month. But for the month of March, since all these provisions etc. are made, so the due date is 30th of April, which has been extended to 30th of June. But if you pay after 30th of April, then interest at the rate of 0.75% per month will be applicable. Shubham.
Yeah. Okay, sir. Thank you so much, sir. I don't see any query now.
Okay, so thank you very much, all the participants, and thank you NASSCOM for arranging this webinar so that I could share this knowledge with the participants. Thank you very much.
Yeah, thank you Rajeev and Shubham for sharing insightful information on all statutory liabilities, be it PF, ESI, e-way bills, etc. And I believe various critical aspects have been covered, and it will certainly assist the members dealing in such domains. With this, we have come to an end of yet another informational webinar. request you all, please follow nasscom.in/events for all upcoming sessions. Thank you all, and please stay safe.